Hello and welcome back to my channel. My name is Jessica Morehouse and this channel is about all things money, but also I love to talk about, entrepreneurship and small business and accounting and taxes because, well, there's a lot of questions out there that I feel like it's very sometimes hard to find the answers, but also, hey, I've been there, done that. I am a small business owner. I started with a side hustle. I then went into full-time sole proprietorship and I recently incorporated my business and I will be doing some videos on that in the future. But for this video, I really want to talk about a method that I sadly only really discovered in the past year, and it's something that I wish I knew right at the get-go. And I kick myself every day for not reading this book called Profit First. Everyone I know who's a small business owner or, a freelancer or whatever, I feel like everyone has read this and loved it and told me to read it for years and years and years. And I just kept on putting it off until I don't know what inspired me, but at the beginning of, I think it was the beginning of 2020 or 2021, I can't remember, the years just meld into one, but I finally picked it up and read it and it was just like, yeah, I should have read this years ago. So anyways, I want to talk about some of the key principles in this book that were so helpful in me changing how I kind of organized my business finances, but also it's basically how I now structure my corporation. So if you want to figure out how to better organize your finances so you can, as the book says, profit first. I hate when I see all these people who just started their own business and they're like, I don't have enough to pay myself a salary, or I'm just breaking even. This book is all about how if you are organizing your finances right and doing a few of the strategies that the author Mike Michalowicz shares, you should always have enough money to pay yourself. So we're going to talk about all this in this video. So let's get to it. So first, let me kind of share a little bit about me in case you're new to this channel. So I started my first kind of foray into this business that I have now almost 10 years ago, starting with setting up a blog. It was a personal finance blog. It was kind of just an online diary. I was just trying to figure out what I wanted to do. I wanted to have a creative outlet. I also kind of wanted to learn digital marketing and social media and website design and all that kind of stuff. And so I started my blog on top of my day job. And somehow 10 years later, here we are, and I have an incorporated business. Weird how things like that happen. It was not the plan. I will tell you right now, this was not the plan, but you just got to be open to things and just take some risks and see what happens. So I ran that blog like it was just kind of a hobby. I was not making any money for a few years. Then I feel like this was maybe around, I started the blog at the end of 2011. I feel like in 2013, 2014, that's when people started actually making some money through, online, blogs and things like that. This is dating me, but it's like, no one was an influencer. Like that was not a term. No one was making a full-time living just off like Instagram and things like that. I don't think Instagram was even a thing, quite honestly. Anyways, and so I only then kind of started to make some money through my blog through, doing freelance writing for other websites, doing, I guess, some Google AdSense like ads on my website, doing some sponsored posts, things like that. And then of course, as you know, things have evolved very quickly since then. And now, you can just make a living apparently just having an Instagram account or a YouTube channel, which is kind of crazy how things have changed so much in just the past few years. So as things kind of evolved, so did my business, and I was able to kind of leverage the audiences that I've created. I also added on a podcast, now have this YouTube channel. And created a business that is, it's a blog, it's a YouTube channel, it's a podcast, I do public speaking. I don't really do freelance writing anymore, but I did do that for a while at the beginning. I'm an accredited financial counselor now, and so I sometimes, not so much anymore, but did for a while work with clients one-on-one. I have online courses. The one last thing, which obviously I haven't done for a while, is I also started my own live event series called the Millennial Money Meetup, which of course has been on hiatus because of this little pandemic that's still not gone. We're still kind of in it. So that is how I kind of make money. I call myself a financial educator or a money expert because sometimes I'm on TV and the news and stuff like that. So that's the title they gave me. But that is pretty much how I make my money in my weird old business. But I had no formal business background or accounting background, so I had no idea what I was doing when I quit my job in 2017 and started doing this full time. So even though I was obviously, like, my whole business is about personal finance and pretty good with managing money, I still didn't really understand how is personal finance different than business finance, and it is quite different. I did a lot of things right just from, I think, instinct or just experience with personal finance, but I did a lot of things wrong. And I want to kind of share some of the things that you should do if you are a small business owner and you want to make sure that you are saving enough for taxes, sales tax. You know, I've got a few videos about, you know, income tax and sales tax, so make sure to watch those. How to make sure that you're actually paying yourself a salary and it's not super crazy variable. And how do you make sure that you are paying your business expenses? You always have enough money to pay your business expenses and you're not investing too much money into your business. Okay, so the first kind of thing that Michael shares in his book, and again, if you don't already own a copy, highly recommend you grab it because, again, it's one of those things that I wish I read years ago and didn't. So I'll include a link in the description of this video so you can check it out. But basically, one of the core principles is kind of flipping the idea of how we can actually kind of earn money through our business. So typically how we kind of think of, you know, business finances is we've got our sales or business revenue, what we're earning through the business, and then we've got our business expenses. So we have to, you know, deduct money for that, and whatever is left over is your profit. Now, there is a big problem with that scenario because it is very easy to just keep on adding more business expenses where there's not enough left over for you to have any kind of profit. It's basically the same concept of, you know, personal finance and budgeting where you're not paying yourself first. So he's, you know, profit first is really the business version of paying yourself first. So, you know, with the pay yourself first concept when you're budgeting, first, we've got our income coming in. Of course, when it's personal finances, we've already deducted money for taxes. But anyways, we've got our kind of net income. We pay ourselves first, so we dedicate that income towards our savings goals first. And then whatever is left over, we use to pay for our different variable and fixed expenses so we can, you know, pay our bills and buy groceries and things like that. Same concept should apply to your business. Business revenue should come in. You should immediately put some money away for your income taxes and whatever you've collected for sales tax, put that away in two separate bank accounts. And I'm going to talk a little bit more about bank accounts in a moment. And then we've got our, you know, business revenue minus our taxes. And what you should do first is pay yourself. You need to pay yourself some sort of salary so you personally can pay your bills and thrive in your personal life. If you're not paying yourself, and there's nothing left over, all of your money is going towards your business expenses. I'm sorry, that doesn't sound like a business to me. That sounds like a very, very expensive hobby. Figure out what makes the most sense for you for your salary. I feel like if you're just starting out and you don't have really an idea of how much your business will earn, be conservative. Back in 2017, when I first started my, you know, business full time, I really lived on little. Like, I really probably spent more than I should have on business expenses and didn't leave that much for me to actually live off of. And that's why I think 2017 was such a grind. It was a really tough year for me because I didn't give myself, I think, enough money for me to personally thrive and grow and feel comfortable. So make sure to set aside a good amount that is reasonable for your personal salary. And then we want to, you know, pay for our business expenses. Now, what I love in his book is he really does give you some good benchmarks and some good ratios to stick to. And one of the best things actually that did happen, this was several years ago, my accountant did actually recommend me reading this book in 2017 and of course didn't. But one of the things that she told me and it stuck with me was, okay, well, based on your business revenue, and at that time in 2017, I think it was 70 or 75,000 in total business revenue. She said, make sure that you don't spend more than 30% of your business revenue on your business expenses. So that was like a good benchmark that she gave to me. And that's something that I've continued to use as a benchmark for my business moving forward. And it has been so, so helpful, because if you don't have that kind of limit that you give yourself, it is very easy to find business expenses. It is so easy to spend money, especially when you're running your own small business, because you have the kind of excuse or the thought process of, oh, well, I'm investing in my business. You hear this thing all the time. I'm investing in my business. Of course, but you shouldn't be investing everything into your business. I saw someone I know online share this, and I thought it was so, so smart of a way to think about things. You would never invest all of your, personal income into one asset. Like, you wouldn't just put all of your money into gold or all of your money into real estate. You want to diversify, right? You want to make sure that you're investing in gold and real estate and the stock market and the bond market. And you want to make sure you're spreading your money around to diversify that risk. So why would you think it makes sense to invest everything into one asset, which is your business? You want to make sure you're spreading your money around. So don't just throw everything into your business, because if you do, you will be in that situation where there's nothing left over to pay yourself or to have a profit so you can then grow the business. Now, in the book, and I'm not going to discuss everything that he shares in the book, but he does have a bunch of other really helpful benchmarks for how much you should and shouldn't spend on other areas of your business. So like I mentioned, 30% is a great benchmark for you to stay below in terms of your business expenses or your operating expenses. But he does actually have that percentage for a specific amount of business revenue. So he says if you're earning $0 to $250,000, it should be 30%. However, if your business is making more money, like between $250,000 and $500,000, he actually increases your business expenses to 40%. He has a bunch of other ratios depending on if you earn more and more and more. But for most of us small business owners, we're probably below that $250,000 mark. So staying within 30% for business expenses is a good idea. The other important thing, which you can figure out very easily on your own, is how much should you set aside for income taxes. Now, I've told everyone this, I'm sure, on multiple videos and blog posts. Just go to this online calculator. It is free. Wealthsimple now owns it. It used to be owned by SimpleTax, but they now own SimpleTax. So you can use this calculator. It'll show you your average tax rate. I usually am a bit conservative, so I like to round it up by a few percentage points just to save a little bit more than I need, just so I can feel good. And then basically, if you have maybe more business expenses or more deductions, such as RSP contributions, then you may have saved too much money, which is great, because then whatever is in excess, that is, you can call it your profit or you can call it your own tax refund, but it is money that you can do whatever the heck you want with. It's a nice little bonus at the end of the year after you pay your taxes. Now, another great benchmark that he shares in his book is, he calls it owner's pay. I'm just going to call it like your personal salary, like what you're paying yourself in your personal life to live off of so you can save, invest, and pay your living expenses. He has different ratios for different, kind of income levels, or business revenue levels rather. And he says if you're earning between $0 to $250,000, your owner's pay or your salary should be 50%, which I like, because hey, we should be, taking a good chunk of what we're earning in our business to pay ourselves. That's the whole reason we quit our jobs to run our own businesses, is so we can earn a living and hopefully earn a better living than the job that we left. That was always my dream and my goal. So 50% is what he says for that. Now, as your business earns more and more and more, he actually decreases the percentage, which makes sense because you may not need as much money to live off of, especially if you're making $1 million. You don't need to necessarily have 50% of that for your, your salary. Also, you got to be mindful of your marginal tax rate. You always want to make sure that you're trying to get into a lower tax bracket so you can pay overall less taxes. So that's something to be mindful of as well. Now, in terms of profit, and what profit is, well, we've got our business revenue, we minus our taxes, we minus our owner's pay or our salary. Whatever is left over after you've allocated money to all of those, that is the profit. And so if you are between $0 to $250,000, he's saying that you should have a profit of $5,000. Now, what you do with that profit is totally up to you. He does give some great examples in his book, but for me, it could just be a bonus. It could be a nice little treat to incentivize you to continue to, work hard, expand the business, try new things to earn more income. So it's a nice little bonus you can pay yourself that you can use on whatever the heck you want, really, a trip somewhere, a new wardrobe, whatever. Or it is something that you can put towards like a specific, personal savings goal. Like for instance, maybe you have a goal of like, I want to pay down my mortgage quicker or something like that. And that makes you really excited and happy. You can use your business profit to do that. You can do whatever the heck you want with it. I'm pretty sure that is the main rule, is to do whatever you want with the profit. That is the whole point of having that percentage as your profit. But the whole goal is you shouldn't just have enough money to pay yourself a salary, pay your business expenses and taxes. There should always be a little bit left over, because it is basically a sign that your business is healthy and doing well. Your business should always have some sort of profit. Now, the last thing I'm going to share is when you have all these different percentage points that you figured out for your, business, and you're going to have 5% for your profit, 50% for your personal salary. You're going to put, for example, 15% away for taxes and 30% for your business expenses. How do you organize all of those? Now, similar to what you would do in your personal budget, personal expenses, I like to put all of these in their own different savings accounts. Now, I'm based in Canada. And so what I did was I opened up a bunch of different savings accounts with EQ Bank. Now, I think they do have a limit to 5 different savings accounts. So that is something to be aware of in case you want to make a bunch of different accounts. But for me, it was fine. So I had, an account for my income taxes. I had a savings account for my sales tax. One that I, used, I kind of used it as like a place where I'd have kind of a good buffer amount of money, and automatically I would use that to pay some of my business expenses that were like automatic subscriptions or my credit card, and also would flow money like through an automatic transfer every 2 weeks, would pay myself a little salary. So I had that, as I called it, my like buffer business emergency fund account. You can do whatever you want. That just made sense in my mind. And then I had one account that was called Profit, that also kind of every quarter I would take a look at my accounts to see, okay, how much profit did we actually make? And then whatever I had, then I would put it into that specific savings account. Now, why I used EQ Bank specifically is because in this low interest yet high inflation environment, sadly, it is still one of the few banks that offer relatively high interest. It's still 1.25%. So it's not, it's not keeping pace with inflation at the minute, but if you go to any other bank, they are offering lower interest. So that's why I use them, just so I can at least make as much interest as I possibly can to keep pace, or try to keep pace with inflation. But it is an online bank, so that is something to be mindful of. Sometimes it does take a few days to make a transfer, but honestly, I've been using them for years and I've been very happy. If that is an account that you want to, or a bank that you want to check out, I do have a link in the description for this video. But again, I've been using them myself for my business or personally for like 4 years now, and I've never had an issue. They've been really great. So that's why I use them. Now, how the flow kind of works, just to make this a little bit easier, and I'm going to show you kind of visualization right now. But basically, money for me, either that's like clients paying me by check, or Stripe payments, or wherever, it flows into kind of my main business account, where there's kind of my business emergency fund, and that's also kind of where money will flow into my personal bank account to pay me for a salary. So money flows into there, and then it flows into my income tax savings account, my sales tax savings account, and my profit account. So it is kind of like this funnel account. Everything flows into that account first, and then flows into my other bank accounts. So I do have it kind of automated. Not everything's automated, like the income tax and sales tax. It's not automated because I have to look at my, accounts to see, okay, how much should I set aside for income tax this quarter or sales tax this quarter? But I did set it up so I was automatically paying myself a salary through that account. And so how I set that up was I just created an automatic transfer to my checking account that lives at Tangerine. And so it was kind of like I was working for a company with direct deposit. Every couple weeks, I would see, oh, there's some money in my bank account. That is how much I can live off of for the next couple weeks until I get paid again. And it was a way that honestly made things so much more organized and simple. And I had only honestly started doing this process less than a year ago, and I really wish it was something that I did so much sooner. It made things so much more organized, and just, I don't know, I just worried a lot less about money. And I think that's kind of like the main point of this book and this strategy, is for you to worry less about the financial aspects of your money, because you have a good plan, you've got a good strategy, and then you can focus more on actually growing your business, doing the things that make you excited. Why, the whole purpose of you starting your business was because you were passionate about it, you wanted it to be profitable, and hopefully you're doing something that you love. And so you shouldn't be spending all of your time worrying about money or trying to organize all of your accounts and stuff like that. One thing I will say is, for anyone who is just getting started with their own small business, definitely invest in hiring an accountant and seeing if they can set you up with this kind of strategy. They can also help you figure out what's some good accounting software to use. For a number of years, I used FreshBooks, which I think if you're a sole proprietor, it's a pretty good software program. I switched over to QuickBooks when I incorporated, and there's definitely a learning curve. I still don't really know what I'm doing, so I also kind of use a spreadsheet to keep things organized until I'm more fluent in QuickBooks. But definitely it is such a worthwhile investment to hire an accountant to help you get set up, so you have a bit of more of a lay of the land, and also they can help you file your taxes and get everything nice and organized, so you're never in a situation where you have an unexpected tax bill or you didn't save enough for taxes. We don't want to be in that situation. So definitely make sure that you hire an accountant if you're just getting started. So those are kind of the main principles and takeaways that I got from reading this book. Highly recommend reading it. Honestly, it is very easy. There are some parts that are dry. I mean, it is about business accounting and finances, but it's like a super popular book. It's really, really popular. So there's something to that. There's so many books out there that are for like entrepreneurs that sound like they're going to be about money, but they're all just about manifesting money. And for me, I'm more of a practical gal. I'm like, no, can you give me something to actually do? Like, manifesting is good, but can you give me some actual strategy, some actual tips? So this book actually does deliver. So highly recommend this book. So that is it for me. I hope you enjoyed this video. If you have any questions about how I run my business or anything to do with business finances, please let me know in the comments, because it will give me some inspiration for a future video, or I'll just answer your question. But thanks so much for watching. Make sure to like this video if you liked it, comment below, and subscribe to this channel if you want to see more content from me on entrepreneurship or accounting or taxes, or just personal finances in general as well. So thanks again for watching. I will see you in my next video.